Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for WealthPress. The market's going to open up in about an hour and let's see here, almost 2 hours, about an hour and 40 minutes or so. My math is not that sharp. It's only about 7:52 in the morning. Market's opening up at 9:30. We are Eastern time. It's Tuesday. It's May 10th. Oh, I remember when I was a kid, May. I loved May. School was almost out. Summer was almost here. But it seems like volatility this summer is just getting started. And I'm not seeing any reprieve, especially with the geopolitical and global environment that we're in. Fortunately, the Dow's up about 200 points. The Nasdaq's up about 100 points, or about 140 points. It'll be very, very, very interesting to see whether this rally remains, picks up, or completely gets drowned out in this panic. Just so you know, the bond market had its first update in about a real update in many, many sessions. I'm hoping it'll take us higher, hopefully to the 125, maybe the 130 level, because I believe the bond market has completely assimilated the current downside in the price of bonds. I think right now we're just being driven by panic. And look at this divergence between the RSI and price. RSI can't go lower. You're seeing something very, very similar on the NASDAQ, okay? You're actually seeing something similar almost everywhere. Look at the NASDAQ. Look at this downslope, and look at this. Anytime you have divergence, you have downslope on price and upslope on divergence on the oscillators. That's a very powerful sign. I mean, look at this. We made a swing low, a multi-month low, but the RSI could even go to 30 yesterday. That's telling us the markets are overdone. There's another major sign, and I kind of touched on it yesterday, but I want to get into it a little deeper today. Now, typically what happens when you see market change cycles is you see the weakest sector stop being the weakest sector, and the strongest sector stops being the strongest sector. So I want to show you something that I showed my guys yesterday. Look at communication services. This has by far been the weakest sector. Look at the downside yesterday. Look at the divergence. Hardly anything, right? But look yesterday. So look at this. Now look at the QQQ. Again, I was showing this everyone in my VIP program yesterday, but I figured it'd be great for you guys to see it too. Look at the downside on the QQQ, right? Look at the downside on tech yesterday. Look at that. I mean, look at that. Look at XLY, consumer discretionary. Look at that. Fell off a cliff. But look at communications. Communications did not. Barely anything. And I mean, we had a down day yesterday. We were down yesterday 2.59% in communication. Look at how much we were down yesterday in tech. 1% more. Look at how much we were down in consumer. 4.26%. Look at how much we were down in the overall NASDAQ. 3.98%. Now look at how much we were down in the weakest sector. And this has been the weakest sector, 2.59% for the last 5 months. Now, if you think it's just my visual chart patterns and I'm fooling myself into a positive change, I'm not. Let me show you. Cumulatively, let me just go back here. Cumulatively, communication services still lagging because it's taken into account the 6-month, 3-month, and 1 month. But look at what happens on a 1-month basis. Consumer discretionary is the weakest. Communication's not the weakest anymore. Now, and by the way, consumer staples is leading, not energy. Now, I want to show you guys something. Let's go back a month. Energy, communication services. Let's go back another month. Energy, communication services. Let's go back another month. We're in February 2nd. Energy, communication services. Let's go back 85 days till beginning of January 5th. Consumer staples, January 5th. Let's go back 80 days. 80 days for 80 trading days. That's like 100. That's 80 trading days. That's like 100 total days. Energy, communication services. But I'm not on a 1-month basis. On a 1-month basis, we're finally, let me just go back to today. On a 1-month basis, we're finally seeing consumer staples lead, and communication services is not lagging anymore. And by the way, when I talk about communication services, I want to show you the kind of stocks that are not lagging anymore. Facebook, Google, Netflix. I just gave you half of the FANG stocks. They're in the communication services and they're not lagging anymore. That's very, 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 very bullish. And that's the first time we've seen that since first week of January. All right. You're not going to get this info anywhere but here, folks. Look at the put to call ratio above the green line, still favoring the turnaround to the call side. Still haven't seen strong projectile into the call side. That means we have a lot of reserve. Bond market looks like it's heading a little higher. And volatility, by the way, look at volatility. Volatility has not taken out the recent high at all. So the way I'm sitting, and the way from where I'm sitting right now, the market's getting ready to go higher, substantially higher. Now let's talk a little bit about global economy. And by the way, you have a report tomorrow, the CPI, that's coming out before the open. But today we don't have anything major. So anxiety increases as U.S. interest rate hikes to fight inflation might stall economic growth. That's not anything new. Remember, we're looking for things that the market does not know. And so far, there's nothing that has been not priced in. Federal Reserve is trying to cool inflation that's running at a 4-decade high. Investors worried that might trigger U.S. downturn. That adds pressure from Russia's war on Ukraine and the China slowdown. U.S. stocks have declined as the Fed turns away from strategy of pumping money into the financial systems, which boosted price. Again, nothing new. U.S. central banks has raised its key rates from close to zero, where it sat for much of the COVID pandemic, where almost everybody was like, hey guys, it's time to raise rates. Last week, it indicated it'll double the size of future increases from its usual margin from 0.25 to 0.50, but they said they'll not go all the way to 0.75. Now, again, earnings are almost behind us. This is like the last major week. The numbers are substantially better than the expectations, like 3 times better. That's also very positive. Now, I know what you're going to say. They've been degraded and they've been downsized. I realize that, but they're still better than expected. We've got Oxy coming out today. The expectations is $2.03 a share. Mr. Buffett has been buying it big time since 2019. He recently bought 91,000 shares. I love the stock, but it's energy, and energy has been kind of wacky last couple of days. So on average, they're expecting $2.03 per share, loss of 15 cents in the year ago. Revenues projected to jump 47% to $8 billion. These are some other stocks that are having earnings today. Galloway Golf, Electric Arts, Fox, FTC Solar. Not huge stocks, but you still have some big names. Hyatt Hotels. Most of the earnings are behind us. Peloton. Wow, do you guys remember Peloton? What a hot stock from the COVID days. Trade Desk is coming out. And again, Time Warner Music is coming out, or Warner Music is coming out. These are the stocks. Nothing major, nothing huge. But again, I just wanted you to see what's coming out and their expectation. Now, today's Wednesday. And on Wednesday, I give you the strongest sector, strongest stock, weakest sector, weakest stock. So since I'm now moving into consumer discretionary as being the weakest sector and consumer staples as being the strongest sector. So if we go down my cumulative strength list, this will be very, very easy to do. That's Dollar Tree. That goes without even thinking twice. And if you don't like Dollar Tree, consumer staples, you can go with Kroger. Either Dollar Tree or Kroger or Campbell's Soup. One of these 3 is perfectly fine with me. And by the way, Campbell's Soup is just now starting to come up on my list. Let's see how it's looking. And it's looking really good right now. We're going to be hearing a lot from Campbell's Soup in the next couple of months. We're going to be sending a lot of food supplies to Europe. So don't be surprised to see these consumer staple stocks rally. Dollar Tree, Kroger, Campbell's Soup. Now, to the downside, now let's reverse course. Let's talk about some consumer discretionary stocks. Under Armour is a consumer discretionary stock. Netflix is definitely a consumer discretionary stock. Amazon is definitely a consumer discretionary stock. And Meta's not a consumer discretionary stock. Let's see if there's other consumer discretionary stocks. Gap, right there. Disney. So there's a couple here, but again, my focus right now is looking at and making sure that this sector rotation does take place, because this is very, 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 very important, and this can completely change the dynamic of the market. Again, on a cumulative basis, energy, communication services, but on a 1 month basis, we're already seeing consumer staples and communication services is not lagging anymore. It's been lagging since January. It's not lagging anymore. That could mean we're in the middle of a sector change, and that could mean upside for the market. Now, it's hard enough. It's hard enough to trade stocks without having to worry about all the noise, the volatility, the earnings that just happened. I mean, it was a landmine for a while there, which is why I want to share the tools traders need to be successful as the market rotates out of growth stocks. Sector rotation not only allows us to take advantage of upside momentum, but one of the best strategies includes a hedge that also protects us from downside, and it's doing a great job right now, all while avoiding the volatility individual stocks can't present. That's like having your cake and eating it too. I'm going live today, live, no pre-recorded nonsense, live, 1 p.m. Eastern time today, to talk about the most explosive opportunities that I've seen since the year 2000. Not joking, and this sector rotation is major. Follow the link below. Don't miss out. It's happening at 1 p.m. If you're watching on YouTube, put some comments, some feedback. I want to hear from you. Send me a love letter, support@marketgeeks.com. And don't miss out. And if you can't find the link to sign up for today's class, go to the YouTube Wealth Press channel. It's there in the descriptor. And leave me some nice feedback. Bye, guys. Thank you so much. And I'll talk to you later. Stay out of trouble. I think we're moving higher. Bonds, put to call ratio, sector rotation, everything. And look at this. Look at this before I let you go. Look at momentum levels. Look at this. You've got 15% of stocks trading above the 200-day moving average in the NASDAQ. I mean, look at this. This is crazy. Bye, guys. I'll see you later.